Let's catch up with the news in terms of results. Plenty out this morning. News Corp beating estimates for fourth quarter revenue, driven by strength in its Dow Jones unit and gains in its Australian real estate business. Revenue in the quarter to the end of June rose 6% to $2.58 billion. Full year revenue standing at just over $10 billion US. That's up 2% from the previous year. Its subsidiary REA Group posting revenue of $305 million US in the quarter, which was an increase of 37% from a year earlier. Revenue at Dow Jones grew by 4% to $566 million US, driven by growth in circulation and subscription revenues. The increase in revenue was partly offset by a drop in advertising revenue at its news segment, which saw a fall of 5% for the quarter. Additionally, news has put pay TV service Foxtel up for sale. Post third-party interest and a strategic review, Foxtel is controlled by the Murdoch family and partly owned by Telstra. Checking in on those shares, we can see a healthy boost today off the back of that result, up almost 9%. Now, I was mentioning REA Group, a little more detail on that result, a 24% increase in net profit after tax from core operations to $460.5 million for the full year. The company attributing the jump in profit to price increases and a lift in national listings. Residential listings rising 7% for the full year, driven by a movement in those major markets of Sydney and Melbourne. Chief Executive Owen Wilson saying that the results reflect a strong market and that the company continues to see a healthy balance of supply and demand in the Australian property market. Checking in on those shares, also higher. QBE Insurance has seen its first half profit more than double, helped by higher gross written premiums and investment income. Net profit after tax for the 6 months to the end of June was at $802 million compared with $400 million a year ago. The company's gross written premiums grew 2% to just over $13 billion for the first half of fiscal 24, driven by increases in insurance premiums of 6.7%, as well as targeted organic growth. Elevated interest rates during that period resulted in strong investment income, while the insurer has maintained a positive outlook for the remainder of fiscal 24. Revenue coming in at $10.4 billion for the half. Meanwhile, it's paid out $527 million in catastrophe-related claims below its provision. It's declared an interim dividend of 24 cents a share, but its shares down around 4% in this morning's trade. Elsewhere, furniture retailer Nick Scali reporting net profit of $82.1 million for FY24, slightly beating expectations. The company will be giving a final dividend of 33 cents a share, fully franked. It has warned that trading in the UK is expected to worsen in the first half of FY25. Despite that, the company plans to expand the opening of 2 new Nick Scali stores and up to 5 plush stores across New Zealand and Australia. And Life360 has upgraded its full year guidance after reporting a 20% increase in second quarter revenue to just shy of $85 million US. Total subscription revenue rose 25% year on year, and monthly active users grew by 4.3 million to more than 70 million subscribers. However, net loss of $11 million US was reported for the quarter, including IPO-related costs of just under $6 million. And the family sharing app is guiding to a full-year loss of between $8 and $13 million US, but expects to be on track for positive earnings in FY25. Those ASX-listed shares have risen around 98% so far this year, and it has, of course, since debuted on the NASDAQ. So it shares a healthy boost this morning.